Good morning and good afternoon to everyone who's joined us for this discussion about fintech in Central Asia. I'm delighted to be welcoming a stellar panel to discuss how exactly the digital transformation of banking in the region is creating opportunities for companies to engage with consumers and other enterprise customers. My name is Esfandiar Batmangelic. I'm the founder of Eurasian Investor, and this is part of a series of webinars we've been doing on Uzbekistan and the wider region, focusing on different economic sectors. I'm delighted to put this program together with the British-Uzbek Society and EUROUZ, and also with the support of the Uzbekistan Venture Capital Association. So, just a couple housekeeping points. We're going to start with a series of short opening comments, presentations from our panel. We will then have plenty of time for questions from the audience. There's a Q&A button at the bottom of your screen. If you press that button, you will be able to submit questions to be answered by the panelists. But without further ado, I'm going to turn it over to Louis Skyner, the chairman of the British-Uzbek Society, who will discuss why exactly we've put this panel together and what fintech in the region can achieve. So Louis, I turn it to you.
Thank you very much, Yar. Yeah, so as an introduction, I thought we'd try and put this discussion in context. And obviously, the context at the moment is COVID. It's triggered a significant economic crisis, a supply shock, a demand shock, and a credit crunch. So you see a reduction in business and consumer lending, liquidity constraints, etc. So one could ask, is this the right moment to discuss the development of fintech, a development that I guess ultimately is based on the inclusion of greater numbers of people in the region, in the financial system, as GDP per capita grows. I think if we're looking at the region, then obviously the countries are faring in different ways. Uzbekistan, the main focus of today's discussion, is probably faring better than its neighbors in that it has a very diversified economy in terms of its produce export, and it supplies to a number of markets. Its economy is also not very sophisticated. So the development banks are not only predicting that they won't see economic contraction this year, but that recovery will be simpler than in more developed economies. Most of the development banks are predicting that they'll be back to reasonable growth levels of 4 or 5% by this time next year. And the government in Uzbekistan, I think they've shown over the past 6 months, when adopting policies to cope with COVID, that one of their priorities is ensuring stability and liquidity in the financial sector. They've made big demands of banks to revolve loans, to replenish working capital, to accept loan repayment deferrals. But they've also given a lot of support to banks. 271 million in the spring, another $208 million to be provided for banks up to 3 years. So at the moment, there isn't really an outflow of deposits. There's highly liquid assets remaining around 11% of the banking portfolio, and non-performing loans are no more than 2% of the total portfolio. So the liquidity and stability of the financial sector has been a key policy aim. But I think the focus today will be more on the need to adopt consistent policies and regulations that support the growth of non-bank operating companies in providing banking services. And this is something that you're beginning to see a discussion about. The government are very keen on social economic development. They're very keen on financial inclusion. Obviously, they want to encourage greater liquidity. And this development will, of course, support economic recovery. My final comment is, of course, the government shouldn't see this as a standalone. It's very easy, I think, when you take a particular sector or even a development within a sector to focus policies and define priorities around one particular aspect. The overall goal in the region has to be, of course, to establish a legislative regulatory framework for all types of economic activity that creates confidence, that's transparent. Obviously, banking sector reform needs to be implemented in general. You need to encourage equal widespread access, need to encourage the utilization of modern financial instruments in the national currency, need to encourage the development of a functioning liquid domestic capital market. I don't think we should lose sight of the overall development when focusing on this sector, but clearly the development of the fintech industry is going to be a complement to that. Thank you, Yaa.
Thanks, Louis. I think you raised a very important point there about, can we really talk about developing a new sector in this way when countries around the world, and particularly in the region, are responding to a crisis? And that's a question I'm going to turn over to Simon Vans-Colina, who's our first presenter. Simon, you're a sort of leader in the fintech space in London. I thought it would be great if first you could introduce yourself briefly for our audience, and then also maybe explain to us what is fintech and what has fintech kind of achieved in the UK and in the wider sort of European banking space. And drawing on Louis' comments, I'm interested to know about whether you think there are any parallels to what we're talking about now, fintech after a kind of global economic shock, to the development of fintech after the global financial crisis. What opportunities emerge from those kinds of moments where the typical banking system is under strain and when consumers are looking for new services? So if you could touch on some of those issues, I think that would be an excellent start to the presentations.
Sure. Thanks a lot. Thanks for the intro. Yeah, so as I said, I'm Simon. I am the CTO and co-founder of a new fintech, a lender called Fronted. We started about a year ago, but we haven't actually launched yet. We're still waiting for our regulatory permissions, which normally takes around 9 months, but this year has been delayed massively by coronavirus and the workload that the FCA had with other things, including Wirecard. So we're going to be a new lender. We're using technology like open banking, things like the APIs, like services that we can consume, like core banking systems as an API, things like acquiring and identity document verification as APIs. We run everything in the cloud. And the main reason we're doing it is so we can reduce the cost of borrowing. As Jeff Bezos says, other people's margin is our opportunity. So we think that by building a lender that can lend money for, specifically for the occasion of people wanting to borrow money for their rental security deposits. If we can do it cheaper than everybody else, or we can do it cheaper than your overdraft, then we think we'll capture a large percentage of the market, which is around 2 billion. There's around 2 billion pounds in the deposit protection schemes, which is basically cash held in escrow, serving no purpose. So we think we can help consumers borrow that money or spread the cost of their rental deposit loan over 12 months. So that's what we're doing now. We hope to launch in November, fingers crossed, if we get our regulatory permissions in time. Previous to that, I was part of the co-founding team at Monzo. I was actually the first engineer hired at Monzo. I built the first version of the platform that Monzo runs on top of. Monzo, for those of you who don't know, I'm sure most of you probably do, Monzo is a sort of darling of the UK fintech community. It is a new bank. Basically, there were no new banking licenses in the UK for 135 years. And then Metro Bank got one. Metro Bank went via the old system where they had to have £100 million of capital up front. And Monzo was one of the 3 or 4 banks that succeeded in getting a banking license under the new regime, where you didn't need £100 million up front, you needed a lot less capital. And we're arguably the most successful of those that are focused on retail current accounts. I think Monzo has around 5 million customers now. And I was there for the first 5 years, and we built everything from scratch. And I left to co-found Fronted around this time last year, actually, in the 18th of October, I left last year. Before that, I've been working in the UK financial sector for many years. I worked with Hussein at Vocalink, which is the company that builds the faster payments, or builds and operates faster payments, and the BACS clearing system here in the UK. I also worked at Citigroup and London Clearing House on various parts of their infrastructure as well. So I think probably the most interesting question was what changed 5 years ago that meant that you could start these new companies? What changed 5 years ago that suddenly meant that you had this Cambrian explosion of fintechs, of small startups taking on the incumbents? And I think for us, like I remember distinctly, 5 years ago when I started at Monzo, the main thing that had changed then was regulation. Was this new way to start a company without £100 million of capital up front had basically been proposed. The FCA had published a handbook that said that you could get a banking license. Nobody had done it, so the process wasn't well exercised. There were all sorts of traps. Like I remember when we went to the Bank of England and we asked them for a settlement account. They said you can't have a settlement account until you're a bank. And meanwhile, the PRA was saying you can't be a bank until you have a settlement account at the Bank of England. So there were certainly bureaucratic traps that hadn't been exercised or hadn't been worked through. But the main thing was that they said that we could get a banking license without £100 million. The other thing that came along was a really small and often overlooked change in the interpretation of a piece of legislation or a piece of the FCA handbook called SISC 8.1, Systems Controls 8.1. And what it used to say, and they didn't change the text of it, they just changed the interpretation of it. And what it used to say was that the right of the regulator to take over a regulated business shall not be infringed. That's what it actually says. And the interpretation of that used to be that if you run a financial services company like a bank, the regulator should be able to go to your office and seize the server that runs your software. And of course, that's fundamentally incompatible with the cloud. You can't go to Amazon and seize your server from Amazon because that server is also, hosting pets.com or a bunch of other things at the same time. So everybody thought that that meant that you couldn't run a bank in the cloud. So it was just really, really, really good timing. I remember myself and the CTO, Jonas, at Monzo were at an FCA event, and we just kept pressing him and asking him, like, every other company and every other industry is running in the cloud. Like, when are banks going to get their turn? And he sort of said, "Oh, I'm not announcing anything today, but check back on our website in a few days' time." And then this sort of like tiny little paragraph said that they were changing the interpretation of SISC 8.1, but it meant that Monzo was able to launch directly in the cloud, and that combined with a bunch of technology that basically came out of Google. Google basically open sourced a computer programming language called Golang, and a system of building technology called microservices that really changed the way software is built. Whereas before you would go to tender and you would ask somebody to build you a giant system. That giant system might take a year or two to build and will be delivered as one giant piece of software that would run everything. Google sort of like pioneered and pushed forward, not just Google, but companies like Netflix as well. They pushed forward this architecture where you deliver software in tiny little components and you do it multiple times a day. So microservices and Google's Golang and another piece of technology called Kubernetes, they all sort of arrived on the scene about 5 years ago. And they gave us at Monzo just an absolute unfair advantage over our competitors. It meant that we're able to write and release software much quicker and much more safely and with a lot less friction than our competitors. And because of that, we're able to build customer-focused products a lot quicker. We were able to get stuff into market and see if it worked, and the cost of getting it wrong was very low. So we were able to run a lot of experiments to see what customers actually wanted. And what customers wanted was, they wanted a bank that was mobile first. They didn't want like a mobile app that let them display their transactions in a sort of mobile formatted web page. No, what they wanted was they wanted an app that worked like Uber, where they could just open it up and not have to type 10 different passwords into their mobile phone to get access to their bank. They wanted it to open up and instantly be in their app, seeing all of their transactions in an app native way that updated in real time. And like in hindsight now, that seems quite obvious, but at the time I remember people used to be astounded that the Monzo app would update before the receipt had finished printing in a shop. So you went and swiped your card and you'd hear this ka-ching and your phone would have updated and the receipt would still be coming out of the printer. And that was just like magic for a lot of people, but that's what people wanted. They wanted that sense of like, they wanted their app to be real time. They wanted that feeling of like their bank was actually connected and up to date, and they really knew how much money they had, and they didn't have this like this fear of opening their bank account because they just didn't know how much money that they would have at the end of the month. So the sort of real-time, low friction, app-first mobile bank was was what Monzo came along at just the right time to do. It was enabled by cloud technology, enabled by the technology that Google released. And we managed to grow very quickly. We've now got, I think, 5 million customers, and I think it's the #1 most loved brand in the UK, which is pretty awesome as well. And I think that there's other technology coming along that is more relevant to basically everyone around the world, which is to bring this sort of like technology to everybody. You need mobile phones in people's hands. You need smartphones, and smartphones need an always-on internet connection. And I'm really excited about things like 5G and SpaceX's Starlink to bring that real-time, high-speed internet access to the entire planet at once. And the ubiquitous availability of smartphones means that this is going to be available to everybody. So any financial services company that's sort of predates that has to sort of watch their back or build it, I think. So I think that's basically my interpretation of the last 5 years.
Thanks, Simon. I think that's really helpful, and it sets up where this conversation has to go, because you touched on a few things that are very relevant for setting up these kinds of businesses in a new market like Central Asia. So first off, when you were talking about Fronted, which is the platform you're building now, you talked about you have to have the cloud solution, you have to have the APIs in place, you have to have the different tools within the app to verify the identity of your customers, for example. And that's all infrastructure that kind of needs to be in place if you're going to build a successful fintech platform. You also talked about the regulatory environment and kind of the chicken and egg problem of, does the business model come first, or does the regulation allowing the business model to come first? So I know that Hus has been recently to Tajikistan, and he's been thinking about precisely this problem. You know, how do you build an ecosystem when maybe the infrastructure isn't there yet and the regulation isn't there yet, and what do you do to kickstart it? So Hus, if we can turn over to you, it would be wonderful to have first a short introduction on where you're coming from on these issues, and then maybe you can tell us a little bit about where you think we are with regards to regulation and infrastructure for fintech in Central Asia.
Sure, thanks, Jan, and hello, everyone. I mean, Simon did a great job of explaining the catalytic factors of fintech revolution in the UK. My background, for this last 17 months, I've been working at Ziglu. Ziglu is bringing the challenger ethos to the crypto space. That's one way of looking at it. We're offering the capability of really easily buying, holding, selling, and ultimately spending digital assets using your smartphone in a very challenger-like fashion. Just like Monzo, we're born in the cloud, Google Cloud essentially, and we're building everything from scratch. We're building our core banking platform from scratch. Before Ziglu, I was at Wave Money in Myanmar, so I've seen really kind of what it takes to, Wave Money being the largest domestic remittance provider in Myanmar. I think it was 8% of GDP the last time I checked. Went through hyper growth very quickly. And kind of I saw the technology that was being deployed in Myanmar. We did some, I think, some very innovative things. We took some very significant risks with the technology that we used. It was basically private cloud, because public cloud wasn't really available for a number of reasons, potentially sanctions, sovereignty laws, and the kind of a general distrust or misunderstanding of public cloud kind of infrastructure and use. Very, very similar to what Simon articulated back in the UK, people being a little bit unclear about what you can and can't do with a cloud, public cloud. And then before Wave Money, I was at Utrip in Hong Kong and Singapore, essentially doing a multi-currency FX travel card. So I've been to a couple of different regions. I had the great fortune of being hosted by the State Committee of Investment of Investment in Tajikistan. They introduced us to a number of agencies, state agencies, and some private institutions, some neo-banks. And we also met with the National Bank as well, and we were given quite a lot of privileged access to the infrastructure that was available. And really what I saw in Tajikistan is not dissimilar to what I saw in Myanmar, where there is no public cloud. I am not aware of Microsoft, Amazon, or Google having availability zones in the region, anywhere in the region, Tajikistan, Uzbekistan, wherever. I'm not aware of that. And that means essentially, if someone asked me to go and set up a fintech tomorrow anywhere in Central Asia, the first question, first problem for me is, okay, where am I going to consume my infrastructure from? Is it going to be a kind of Myanmar model where you have Huawei creating a data center and maybe some operators from the West providing hardware? Is it the other way around? Is it Chinese hardware operated by maybe a native operator? But it's essentially going to be private cloud. It's not going to be public cloud. And there are big problems with that in terms of, again, what Simon's already said, the cost, the time to market, the skills and expertise that you need to simply kind of operate that infrastructure is highly prohibitive. And I think you can see that in the fintech offerings that are available in these countries. They may look like challenger banks, they may look like neobanks, but they don't operate that way. And that's because I think a huge amount of resources are being diverted to maintaining their infrastructure. And one of the things that happened in Tajikistan, that the internet went down for 4 hours. Now, I didn't know if I'd run out of my, my top-up allowance on my phone. It was very expensive. I noticed that the internet was extremely expensive in Tajikistan, but it wasn't actually my phone running out of credit. It was the fact that the internet was down for 4 hours. That kind of disruption, service disruption, is, that has to be solved before you can really attempt to do anything in fintech successfully, in my opinion. Starlink would be a fantastic thing, anything that can solve the infrastructure problem. Now, what are the states in the region actually trying to do? If you look at the laws and the regulations, there is, as far as I'm aware, I've looked at Tajikistan, I can't speak for the other countries, but there is no explicit provisioning for an EMI license that you're allowed to apply for if you're not a financial institution. Of course, the central banks can issue licenses, and probably have, to non-financial participants, some of the mobile phone operators, for example. But it's not clear. And that lack of clarity is, again, it's a barrier to adoption for anyone going in. If I was going to invest in the fintech sector in Tajikistan, I would want real clarity around the electronic money license capabilities, requirements of legislation. Apart from the legislative aspect of it, which I think is more around clarity rather than significant changes to the law, the lack of a public cloud infrastructure, I think, is massively prohibitive. It's the first thing, as a technologist, it's the first thing that I was looking for is, okay, how quickly can I spin up my infrastructure in Dushanbe? Not quickly is the answer. It's going to require a huge amount of time and effort. So what is the state doing? We visited some free economic zones while I was out there in the 2 weeks that I spent in September, and they are very attractive. Some very good concessions for foreign investors, potentially for the likes of a data center or a cloud provider to operate in regions with very low electricity costs, plenty of water, local skills and expertise, kind of buildings, everything that you need to actually set up a data center. So why isn't anyone going there and setting up data centers under these very attractive terms? I mean, that's a question that needs to be answered. Partially, it's trust. I mean, I think in the West over here, there's still a perception of kind of the bad old days post the Soviet collapse, where money would disappear. There's a huge amount of corruption. That yes, the rewards were very high in the region, but so were the risks. And for a risk-averse investment community, Central Asia, if they're even aware of it, is not the first option. So I think the states can do a lot working together to change those perceptions. And I'm really pleased to see the work that the Uzbek and the Tajik embassies are doing here, the chambers of commerce and the societies. I think there's an element that we can help with there in terms of changing the perception and making people aware of what the opportunities are for investors. But really for me, I'd want to see public cloud, either maybe it's a regional effort where we have an organization that creates public cloud infrastructure along with the other kind of infrastructures that are required, stable, low-cost internet, or we invite and incentivize foreigners to come in and do it for us.
Thanks, Hus. I guess a quick question before we turn over to Dilshod, but what you're describing is that fintech is in some ways different from other sort of digital platforms that you want to build, because at the end of the day, you're dealing with people's money and companies' money, and that creates stronger burdens for security and privacy, and also for the regulation of whatever the activity is that you're doing. I mean, do you get the sense that there are sort of stepping stones that would allow us to get to the point where some of these business models become more viable? Because you're sort of describing that if you were to imagine setting up a company at the moment, you would need this significant infrastructure in place. Is there a situation where you can think of, let's say, a sort of narrower, more minimal kind of product offering that maybe doesn't need quite as much robust infrastructure or as strong regulation that could then help sort of prove the concept before you move forward?
It's certainly an option. I think you really have to do your homework on that one in terms, and picking a product is hard enough. I mean, what you see happening in different regions is they just copy what's happened in more successful regions or more advanced regions. So the whole notion of a challenger bank still hasn't quite made it in a few areas, in a few different regions around the world. So you could just copy that. Unfortunately, if you're going to go down that line and you want to kind of have the security that's required for card processing services, for example, PCI DSS, all of those kinds of things, you're going to need, I think, a lot of help in setting that up. I don't doubt there are products that you could prototype and experiment with, and they'll be very localized, I think, to the particular country within that region, depending on what's available. It's an option. I think it would be a difficult one to pursue, but again, the rewards would be quite high if you could crack that nut.
Thanks, Hus. Dilshod, let's turn to you. So you are the founder of Uzbekistan's first venture capital association, and we have a presentation that you have kindly shared with us that I'm going to share on the screen. But if you could perhaps introduce yourself briefly and then maybe tell us about what you're seeing on the ground in the ecosystem in Uzbekistan, and do you see the same challenges with regards to the infrastructure, the technical infrastructure that's necessary, like cloud computing, and also the regulation that maybe sometimes foreign investors or foreign fintech companies would consider important for them to enter the market? I think you're very close to this on the ground with the ecosystem, and I know you've recently completed a major report looking at the ecosystem in Uzbekistan. So we'd like to have your thoughts. Let me share the screen, and then we can allow you to start the presentation. One moment.
Thank you very much, Isfandiar. First of all, thank you for your invitation for this webinar, and where I will try to share with my view.
Here, I am sharing it at the moment. Let's see.
Okay.
Can you see that?
It's okay, yes. So let me introduce myself. Dilshod Zufarov. I'm a CEO at Uzbekistan Venture Capital Association, which was established this year as a union of investment structures whose mission is to support the development of venture and startup ecosystems in Uzbekistan. And we are working on four main areas. It's attraction of venture capital into startup ecosystem, and researching and training of venture skills to potential investors, and protection the right interest of the venture ecosystem and startup ecosystem in front of government, in front of the government. So talking about financial technologies in Uzbekistan, next slide, please. So today, financial technologies in Uzbekistan is fast development segment of modern Uzbekistan. This development includes a variety of solutions ranging from online payments and ending with money management and mutual lending systems, which will be also active in a few months. So as you can see, the maybe some indicators like internet penetration, mobile penetration, and smartphones penetration are not the same as in other countries, but especially this year, as government is doing a lot of works to increase these penetrations indicators. And banking penetration is 40%, so it is a big obstacle that I see that we have in Uzbekistan on the development of fintech fintech ecosystem. So next slide, please. So who are the key players in fintech market? There is two local payment processing systems. It's Uzcard and Humo. Uzcard is taking a majority of the market. It's about 85% of the market is taking Uzcard. And there is 35 mobile banking applications and 11 non-banking payment platforms. And you'll see on the next slide that the new payment platforms were 9 new payment platforms were registered only during COVID period. Next slide, please. So here you can see some of fintech startups and scale-ups and key players which are acting in Uzbek market, on the fintech market. And next slide, please. And here, if you can see, this is a whole overview of Uzbekistan startup ecosystem, and I have to say that the majority of them, about 60% of these startups and scale-ups are fintech startups. But there is an obstacle for startups: the lack of financing. The lack of financing. So a lot of startups they are still on waiting rooms, and but the startups which were already developed before COVID and entered to the market before COVID, they have increased their cash flows with 5-6 times. It was a good success story for them. But those who couldn't enter to the market before COVID, they are on holding. So next slide, please. So let me tell some of some indicators of new indicators. We are now working on first Uzbekistan fintech ecosystem market research, and I have decided first to share some of the numbers which I have already. You can see the numbers are for as of September of this year. The amount of fintech transaction during the 9 months of this year was $2.4 billion. It's more than twice times more than the same period of the last year. And of this, and 0.5 billion of this amount is e-commerce transactions. So, and e-commerce transactions, its amount of e-commerce transaction, it means $0.5 billion. It's 50% more than the last year for the same period. So the interesting thing is here that you can see that e-commerce merchants share in Uzbekistan is 2%, only 2%. But the growth is year to year is 30%. But this 2% of e-commerce merchants, they are generating 40% of all market, e-commerce and offline commerce. And this market share, it means amount of e-commerce transactions they have growth for more than twice for the last time, for the last 9 months. So next slide, please. So here you can see the e-commerce transactions, and you can see here that the average check per e-commerce transaction has grown for 50%, and the number of e-commerce merchants he grows for 46% year of year. And ATMs also, they have grown for 40%, for 45%, and there are around 8,000 of ATMs. Why ATMs? Why I'm showing here ATMs? Because we have in Uzbekistan offline market and non-cash market. So this indicator will be useful for some fintech players to see that the growth of ATMs is growing, because every user he will finally need to take money to withdraw. That's why this indicator is also of interest. So, and the next slide, please. So you have seen in these indicators that the growing fintech market of Uzbekistan. So what are the measures, which measures and which factors they have were like a trigger to this development? Firstly, it's currency liberalization in September 2017, and which allowed to banking sphere and to I would like to banks to cancel the lack of cash, because before currency liberalization, every bank has a problem, big problem, that there were no cash in the banks, so there were a black market, and currency liberalization was the first and the main trigger to development of fintech market. In the next years, there were a laws and presidential decrees on law on payment and strategy on reforming banking systems. So these laws and presidential decrees, they have allowed to a market player, fintech market player, to do an agreement with other merchants directly without going to the market, because before every fintech company should go to his bank to deal an agreement. So these were a big trigger to the development of the market, and these measures have shown the indicators that you have seen, and also COVID period also it was like a trigger to development of financial technologies. So from my side, thank you very much. I'm very sorry for my English. My first language, foreign language, is not English language, so I have to use. I hope you could understand me.
Dilshod, your English is excellent, and the presentation was very clear. So thank you so much. I mean, I think the main thing to highlight here is that, at the start of the presentation, Simon described how basically in the UK, in the aftermath of the financial crisis, with a few bits of movement in regulation and in technology, you had this explosion of new fintech startups. And it looks like, based on your new market research, that we're seeing some of the same growth in Uzbekistan. Even you mentioned that there were 9 new payment platforms that were set up during the COVID-19 crisis, which I find remarkable and a great sign of economic resilience. So I want to remind the audience that if you have questions, please feel free to submit them through the Q&A feature at the bottom of your slide. We can see a couple questions coming in, and I have a list of questions to discuss as well. But let's turn now to Kiyan. Kiyan, again, if you can introduce yourself before you make your comments, but I wanted to sort of highlight the magic numbers that were in Dilshod's presentation. So he pointed out that you have 75% smartphone penetration in Uzbekistan, and you have 40% of the population being banked, basically. That's a really interesting difference, and it's perhaps unusual to the way that fintech would have developed in Europe or in the US, where banking penetration was very high, and then smartphone penetration followed. So as an investor who is actively basically trying to support fintech development in the region, tell us a little bit about what these numbers tell you and how you're sort of looking at the business case for putting your capital to work in these companies.
Sure. Well, first of all, thank you for having me. So as a quick introduction, I'm CEO of Sturgeon Capital. We're effectively a London-based investment firm. And our job ultimately is to be investing in technology-enabled businesses in frontier markets, and especially in Uzbekistan, how those technology businesses link within fintech services as well. And so off the back of that, we actually launched a dedicated fund for Uzbekistan in March of this year. And those numbers you highlighted are the primary reason why the opportunity set is so attractive. But ultimately, it's a question of business models. The two key variables to lead to success, I think, in fintech are distribution and credit data. And if you look at the business models that have been developed in the West, the distribution side of it has been somewhat difficult. Why? Because you already have a population which is well banked. And the only way to really challenge that well-banked population is to try and have some deposit service or some payment gateway or some other service to try and move that customer base over from what they have been using so far to a new service. And that the ultimate aim is to capture a large enough customer base such that you can start selling them other services and to become profitable. The difficulty with that as a business model from an investor means that for an extended period of time, you have to effectively subsidize losses till you have a large enough customer base such that you can then selling them services to be profitable. The beauty in a country like Uzbekistan is you have such a large unbanked population that game, if you want to call it, is a bit easier. But our approach, or the most effective approach we see, and you've seen this across developing countries, is to provide fintech services through non-bank means. So if you look at the truly successful business models that have developed, they have actually been, if you take Caspian as an example in Kazakhstan, the success of that business really was developed out of an e-commerce marketplace that happened to have financial services alongside it. If you look at a business such as Ant Financial, which is the subsidiary of Alibaba, which is just about to IPO for 200 billion, that again, came out of the e-commerce business that then also added financial services to it. Why? Because the cost of you capturing that customer base is much lower if you're providing them a service which is already revenue generating. And so our approach in Uzbekistan has been twofold, and focusing specifically on the consumer retail and the SME market. Why? Because consumer retail, as you said, 60% of the population is unbanked. SMEs in Uzbekistan represent roughly 60% of GDP and don't really have good access to financial services. And the two business models that we're focused on to overlay financial services is e-commerce and basically software. And on e-commerce, effectively, if you think about it, penetration in the country is extremely low, 0.2%. The business that we're invested in at the moment is the leading e-commerce business in Central Asia. It has 5 million users. And what we're doing now is, because those users are regular users of the application, they're buying products from mobile phones to phone covers. To make it easier for them to shop, you can easily overlay installment loan products. And the beauty is that you don't have to take on the balance sheet risk of lending to those customers. You already have a bank network. They ultimately want to increase the distribution of which they're lending to. And we simply tap them into the e-commerce platform and we take a fee for doing so. What that means is, from our perspective, we don't really have to worry about regulation, having a certain level of infrastructure. We're basically an intermediary. And from a business model perspective, it allows you to actually offer those services in a profitable manner. With SMEs, the challenge really the banking system in Uzbekistan has today is that they don't really have a systematic way of generating data, credit data, and understanding who to lend to and who not to lend to. And as I said, SMEs today in Uzbekistan represent about 60% of GDP. So it's a big market. And the way we're tackling that is effectively, we're invested in a basic enterprise software business that provides two key functionalities to SMEs: inventory management and account management. Now, what happens for the provision of that software? Effectively, for all the SMEs that are your customers, you're learning their inventory cycle management, and their cash cycle management, which are two key data points a bank would need to be able to lend to those customers. And that data is proprietary, effectively, to that business and to us. And again, similar to e-commerce, we can basically link the existing bank network in the country with the data that we have on the companies to be able to provide working capital loans through the platform. The beauty of that is that also the SMEs also have a large customer base. Again, you can link the banking network that already exists with the customer base to provide consumer loans as well. And the totality of that model through e-commerce and software is that you're capturing a very large customer base. You're not doing so in a loss-making manner because you're generating revenues from your core business. And you're utilizing the existing infrastructure, that is high smartphone penetration and an existing banking system that's looking to increase their lending book, to provide financial services in a profitable manner. So what's interesting is that when it comes to fintech, the developing world is probably by far a leader in providing financial services than a developed world. And that's clearly seen in the profitable business models that have been built in developing markets, as opposed to the fintech businesses in the developed markets, which, whilst there's no doubt that the service is much better, it's very difficult to get to a profitable business model. So that's our approach, but if there's any questions around it, I'm more than happy to answer.
Thank you, Kiyan. I think that was very persuasive, and it's obvious that you've given that pitch to some of your investors as well. So there are a number of really good questions coming in through the Q&A, and we have about 20-25 minutes that we can spend to answer these questions. I'm going to turn to a question from the audience in a moment, but before we get there, I wanted to pick up on something that you said, Kiyan, and Simon, perhaps you can also comment on this, but Kiyan, you've described kind of the role of these fintech companies as sort of intermediaries. They can provide a layer on top of existing kind of e-commerce or software businesses, and thereby assist banks in getting their products to new customers. But when we think about the emergence of fintech in, let's say, in Europe, often fintech companies like Monzo, which Simon helped establish, were described as challenger banks. And there is this idea that, in fact, fintech companies are out to disrupt traditional banking. So how do you navigate that? And how do you think that will be navigated in Central Asia when you have these traditional banks that, of course, are concerned about maintaining their market position? Will they feel threatened by the emergence of fintech, or will they see it as an opportunity that they can get engaged with? And what is the way that a founder or an investor tries to navigate that tension? And Simon, if you can perhaps speak from your experience, I think that would be helpful.
Sure. So if you think of any business as the two factors, that they provide some amount of consumer surplus, and that some businesses can extract more economic surplus from the business model or not. Now, as I said, there's no doubt that the challenger banks in the UK and Europe provide a much better service than the existing incumbent banks. But to make that business model profitable is extremely difficult. Why? Because you have to move away the existing customer base to your customer base. That costs a lot of money. And then only after a certain amount of customer saturation can you then start monetizing that customer base. And if you look at Uzbekistan already, the existing banks are now being very aggressive in trying to move into retail banking. You've had TBC from Georgia, which is a very successful bank, also come in. And so if we were to go and create or invest in a challenger bank in Uzbekistan, we think it would just be very difficult to make money. You almost have perfect competition. You have competitors with probably much more resources available to them than you. And so it'd be very difficult as an investor and as an entrepreneur to try and be successful in that pursuit. So our view is, how do you slot into that existing infrastructure and effectively have some advantage such that the rest of that infrastructure is competing for what you have? Now, what they compete for is distribution and data. And if through non-fintech businesses, you have the both of those, you effectively let the banking sector compete for it, right? So if you have an SME business which has, let's say, 1,000, 2,000, 50,000 SME clients, you have all the data on them. I don't have to worry about my interest cost lending to them. I let the banks compete for that because I have the distribution and I have the data. And that is a much more I would say, rational and better way of going about investing and building businesses in the country and broader and within frontier markets than creating a challenger bank. When not only will you have the incumbents which feel like they're disrupted and could start arguing to the regulator, but you have to spend a hell of a lot of money to try and actually win with probably low odds of success.
Look, yeah, I 100% agree. 5 years ago when we started Monzo, I think the reason Monzo got as big as it has done was because the banks didn't believe that we would succeed. They didn't believe that we would capture any consumers at all. And we used to say, if we can get 30,000 customers in our first year, then we've done well. We were very lucky in that, I mean, I was speaking, you know, Monzo was very lucky because there was just no good alternatives. That's not the case now. I wouldn't start a challenger bank in the UK now. There is competition. People know what good looks like, and it'll be much harder to do it again. But that being said, it's a lot easier to start a fintech that tries to capture one part of the value stream than it was 5 years ago. 5 years ago, we had to build our own core banking platform. That's not the case anymore. There's companies like Yabota and Mambu that will give you a core banking system off the shelf at very, very reasonable prices. Fronted uses a bank called, well, no, they're not even a bank. Fronted uses an operating account called Modular, by a company called Modular, that have a reserve account at the Bank of England, and they're directly connected to faster payments and backs and everything else. They're not a bank. They're just they have all of the access of a bank, but they don't try to make money out of you know, they're not competing with you as an alternative lender. So in the last 5 years, these players have come up that do different parts of the different parts of the you know, different parts of the product, leaving banks with the bit that they're supposed to do, which is to lend money. So I think a bank can be good at lending money if they will work with a company that, you know, owns the customer relationship and owns the really good quality user experience. And another company does the identity document verification, and another company provides the infrastructure, the payment rails, and another company provides the infrastructure. And like, these things all work together in a way that means that you don't need to start a whole challenger bank and do everything from scratch like you did 5 years ago.
Simon, let me add a follow-up to that, and then perhaps Dilshod and Kiyan, you can comment on this. But one of our audience members has raised a question about precisely this point, that basically, you know, some of these fintech firms are ostensibly providing a banking service, but they're not a bank. And if customer acquisition is so important, I wonder where the question of trust comes in. I mean, was trust, getting the trust of consumers that they were going to be safe using your fintech platforms, important in the case of when you were setting up, let's say, Monzo or now Fronted? And then I'm interested to hear from Dilshod and Kiyan whether how trust works in the Central Asia context or in Uzbekistan. Is it something that fintech companies have to do to make consumers feel like it's okay to send or receive money or to make payments through an app on their smartphone, and whether that's something that is the same or different between how these things developed in Europe and how they're developing in Central Asia? So Simon, maybe first, if you can tell us whether trust was important.
So the jury is out, because there's the tale of three siblings, right? Starling, Monzo, and Revolut. And we all took slightly different strategies, but we all actually used the same card processor at the same time. So when that card processor had issues, we were all down at the same time. So we all got affected by the same, like, you can't trust these new challenger banks because their cards go down issue. And, you know, they were happening at the same time. Starling chose to launch nothing until they had their banking license and then launch a bank. Monzo, we launched a prepaid e-money institution card and then switched to a bank. And Revolut has only just recently got a banking license in Lithuania. And when you look at it, Revolut has the largest number of customers and Starling has the smallest number of customers, and Monzo's in the middle. So, like, a very small amount of data, but the data seems to indicate that if you are going to get a banking license, you can do it later. You build a consumer brand before you have, you know, the benefit of having a banking license appears to be smaller than was assumed, but Revolut has still gone and got a banking license because it is the gold standard for protection. And if you want people to accumulate significant wealth in your app, you want people to store their life savings and not just the 50 quid they're going to spend on Saturday night, then I think you do need to have a banking license eventually. But the jury's out. We'll see which of the companies ends up being the global superpower.
And Dilshod, so do Uzbek consumers, there's been this growth in fintech. Is there trust in the products that are being built, or is it difficult for companies to try and convince consumers that their money is going to be safe or that the app is going to be reliable?
Thank you for the question. So first of all, if we look at the history, after the clash of USSR, a lot of people has lost the money on the banks. So it was the picture on the mind of people. So and from the another point, before the liberalization, the people couldn't give money to the banks because they know that for withdrawal it will be a big problem. From now, I can surely say that it's changing. It's fast changing. First of all, for example, I will tell the last the government decision on May of this year. It was a presidential decree on reforming of banking sphere, and now every bank has to integrate fintech technologies for in-house. So every bank today, we have 38 banks in Uzbekistan, and each bank has own payment application, not only a payment application, but fintech application. You can do P2P, credit, soon, and deposit, etc. So, and each bank now, with social media and with popularization. So each bank is working on popularization of his technology. And I didn't show on my presentation the number of deposits because we didn't finish our market research, but the number of deposits is growing, but the percentage is decreasing. So interest rate for deposits is decreasing. It's very, very good for private equity and venture capital. Because, for example, when banks they are proposing to population a deposit for 30% on local sums, it's fantastic. Why should I give my money to startup? I will put it to bank deposit. It's for 30%. It was 30% for deposits for local currency, and about 10% interest rate for deposit on dollars, on hard currency. So the last months, this interest rate decreased 2 times, and now we are lobbying that these interest rates should decrease 1 more time, because we see that the people take money from deposit and come to the private equity market and venture capital market and ask such person as me, oh, I have money, so deposits are not more interest. So where there is interesting instruments to growth, to increase the money. But to work on private equity and venture capital, there is no still law regulation. There is law regulation, but there is no instruments. Like, for example, limited partnership law. We cannot here now, as of today, we are working on this law, but we cannot open private equity fund, venture capital fund with GP, LPs, etc. And the law as of today, for example, LLC law, he doesn't defend the interests of investors and founders too. So these are the main challenges that our maybe private equity and venture capital ecosystems that he will have in front of him.
Thank you, Dilshod. Kiyan, before I ask you a different question, I wonder if you could react to what Dilshod just said. So obviously, you know, there are these barriers to developing the local investor base that will support the ecosystem. How important is that for your strategy in terms of, you know, eventually getting the businesses that you're investing in to grow? Is there a point at which you would want to see local capital also coming in and getting skin in the game? And how important is that for the development of the sector at large? Are you sort of counting on that becoming part of the mix in the coming years?
The short answer is no. I mean, if it comes, then it's great because it raises awareness of the whole ecosystem. There's embedded interest in that ecosystem succeeding. But what we're effectively trying to do is taking on risk on our own shoulders, investing capital, de-risking these business models that we're investing in, bringing in more international capital, and by kind of that virtuous cycle, then showing the local investor base the positive angle of investing in venture, investing in private equity, and then hoping an ecosystem builds around that. What we care about is that the business ecosystem of venture is built in Uzbekistan. I think Dilshod is doing an amazing job in that respect. But just quickly, 10 seconds on the trust angle you mentioned. The issue of trust comes in is when you're asking something from the consumer. And again, it goes back to why a challenger bank is difficult. The only way a challenger bank works is if you have deposits come in, and then you can start lending and providing other services. And deposits, if you're providing deposits at the same interest rate as the other banks, no one will want to come to you. Which means implicitly you have to offer a higher interest rate, which means that the risk you're taking on board as a business model is very much more difficult. But if you flip it and say, I'm going to give you something as a customer, I'm going to build my goodwill by providing you, I don't know, e-commerce, software, whatever. And I'm saying, by the way, I'll make it even more easier for you. I'll give you loans because I have this data on you, because I've built this goodwill. That makes the whole process of building that business model to an end solution of having a lot of different financial services much easier.
Can I jump in on that? Kiyan, I think no one's arguing with you around business model in terms of it's pretty tried and tested, right? Building a challenger bank is probably not the right thing to do in Uzbekistan, 100% agree. I think offering value-added services and then sneaking in financial services which are delivered to a higher quality than the existing banking ecosystem, that's the right approach. No argument with you there. But having done something similar to this in Myanmar, when you're telling me that you're going to kind of interconnect and reuse the services that are available, if you're in Europe, I totally buy that. Okay, so you know, as Simon was saying, know your customer, anti-money laundering, some of the things that you will need to be doing in order to satisfy the existing regulatory requirements within the state that you're in. You're going to have to do some of that yourself. I'm not sure if those services are going to be available. Even if they are available, there's a real problem here. If your business is going to grow and hyperscale, your partners need to do that with you. And I'm just not sure if that's for me is a massive risk in kind of assessing. If you were to tell me tomorrow, who's come over to Uzbekistan, integrate all of these service providers for me, my business is going to be worth 10 billion in 5 years' time. I'm going to look at those service providers and probably say that they're not going to scale with you. They're just not. And the investment that you're going to have to make on your own to make that happen could be colossal. And you need to plan for that ahead of time. So I'm with you on the business case and the approach. By all means, that is fintech, a non-financial actor disrupting financial services. That is what you're describing. My concern is the expertise available to make that happen? Do you have to import it? Do you have to bring in expats? Are you going to have to train people up? Are you going to consume all of the resources already in a heated fintech sector? I mean, we're having this problem in London. Recruitment is difficult. Finding the right people is incredibly tough. Now, again, it's a different technology stack, but from what I saw in Central Asia, I'd say it's around maybe 10 years behind in terms of the architectural principles that are being applied, monolithic applications being deployed, not containerized Kubernetes as Simon was talking about. So about 10 years behind. Okay, that helps in some ways because those skills are actually quite widely available. But what are the laws around bringing in expats, bringing in foreigners? Have you got agreements from the state that let you bring in the right people and the right talent? And is that available there? Those are the questions that I'd be asking.
No, it's a very good point. So two different things. One, if you think about the integration that ultimately you have to make, whether it be for e-commerce or software with the banking system, that's effectively a service that the company has to build. And you start off slow by working with, let's say, one or two banks, like any venture, testing that system, where are the weak points, and building on top of them. What we've done specifically on the SME side is actually invest and found a microfinance institution, which will have the balance sheet to connect into these companies to lend. So if you take a business like Kaspi had a marketplace which went from 0 to $1 billion in GMV in 3 years, but they also had the banking license themselves to be able to fit in to that platform to then make the lending. So it's having the option where you can do it yourself, but doing it only when you have the platform that you can lend through, that is the distribution and the data, and then also bringing the optionality of making, let's say, open source such that the rest of the banking sector can also fit in.
Thank you both. So there are two topics that I want to discuss in the sort of time we have remaining, and they come from the questions that have been submitted by the audience. So one, I think we should talk about people and talent, which is something that Hus also just touched on. And then two, I think we need to think regionally. And so we've had a couple questions about, we've talked a little bit about Tajikistan, about Uzbekistan, but how does this actually look if we're thinking about Central Asia at large? So let's start with the regional question first. And the question that's been raised is basically, for example, Kiyan, you've described how you're thinking of fintech and implementing these new business models as a layer on top of, let's say, e-commerce. And we know that goods are transferring over borders in the region, and there's a lot of regional trade. And so it makes sense that you can imagine using that as a way to broaden outside of just one market. But at the same time, I think it's a little less common for banking services to be provided, across borders. And so one of the things I think we need to grapple with is, can we imagine a situation where the regulatory environment and the tech infrastructure is in place so that, for example, a fintech company in Uzbekistan can serve customers in Kyrgyzstan, Tajikistan, Kazakhstan, and maybe even Turkmenistan one day? So Kiyan, if you could talk a little bit about whether or not that's in your development plans, and then let's go to Hus, and then Dilshod, if you can also describe whether or not you see any regional developments for the ecosystem. Is this something that founders are actively setting a goal for themselves to say, look, I'm going to look at this whole region and the 70+ million customers I can target?
Sure. It's not easy. I think it's quite difficult, primarily because you have complete different, whilst they are neighbors as countries, they're different business landscape, different regulatory structures. There's two ways of going about it. One is if you take software, for example, let's say you build the leading software company and you've managed to build in the functionality to provide working capital loans and consumer loans to your customer base. If you're successful enough in Uzbekistan, then there is a potential to move that to Kazakhstan and fit it within the regulatory landscape of there. What we're doing on the e-commerce side is providing a functionality which basically in the past 6 months has all of a sudden become popular and doesn't really need any regulatory requirement. And that is a concept called buy now, pay later. So two businesses, Klarna and Sezzle and Afterpay, are kind of very successful in that regard. And there is the question of how they should be regulated, but as of now, that service doesn't need to be regulated. And what is that service? That service is saying, if you buy a product, you can pay in 3 installments over 60 days at basically no interest rate. And that is a service that you can provide cross-border to all the consumer base because you don't need a regulatory license for it at the moment. But the short answer is difficult. But we think that within certain verticals, the market in Uzbekistan is large enough for it to be a meaningful business. And that when it comes to it, you can try and, if you're good enough in that country and you had a kind of enough of a success story, then you can potentially move to the other country.
Hus, do you want to jump in?
Cross-border payments, I absolutely loathe them. That's an area that requires disruption, right? It's ripe for it. Now, if you look at Central Asia historically, it's culturally a contiguous kind of piece of geography. And the flow of capital, ideas, and goods through the Silk Road in that region has been instrumental for development of civilization globally. The problem right now with just cross-border payments in the region is a disaster. I think it requires a regional effort, and the leaders in the region need to have the ambition to solve this. Because until you do, it's going to be a break on everything else, that all the other development progress that you hope to expect to solve. This will retard it greatly. So solving that problem, it actually has been solved. So I think it's more of a political solution. It's more a case of political will than a technical solution. I mean, yesterday we listed XRP, which is a digital asset we designed to be very quickly and simply transferred across borders. We listed that on Ziglu yesterday. There are lots of technical solutions. I'm not saying XRP is the only one, but if there was the political will to solve the cross-border payment problem, make it simpler, make it safer, make it really transparent and easy to use, I think it will go a long way in kind of incentivizing cross-border trade and services. And then finally, it will strengthen the region, because I think Central Asia has the capacity, because of its location, to actually be a huge area for economic development. You have Russia on one side, China, Iran, and Europe. You're bang in the middle. So solving, I think, the cross-border payments problem should be a strategic goal for the region.
Dilshod, turning to you, I mean, how are the founders right now thinking about the wider region? Are they, imagining that they're going to not just reach Uzbek consumers, but consumers across Central Asia? And do you think that that challenge that Hus was describing can be solved? I mean, I would just note that one of the very kind of optimistic things about the current moment in Uzbekistan is that there has been a renewed focus on the neighborhood, and that the government is really trying to extend its relations with its neighbors. So maybe that opens the door for some integration in fintech. What do you think?
Thank you for your questions, Zandiyeh. So the point that you have focused is a very important point as of today. On the one side, we have one obstacle, not obstacle, but the problem that I see, that the startups, they are launch, and fintech companies, they are focusing first of all on local market. So they want to start local and then go global. I would say that there is very few companies that they are just starting global. This is the problem that I see, because when you start local and then you scale for other countries, for neighbor countries, each country in Central Asia has own regulatory, especially in fintech. So they have to open a representative office in each country. They have to learn local foreign jurisdictions and laws, etc. For transactions, it's okay. Maybe they can integrate payment systems, as they can collect the money and render IT service, not hardware service, but soft services. But what I see in practical, in reality, the companies try to open representative office in other country, and it takes about half a year to launch and to enter the market after the opening of presentation. And there is a juridical moments too. So now the answer would be that the countries should take regulatory laws by synchronizing There is no synchronization on each country. It's the first. But there is a short decision that we are now trying to implement. It's to register companies and to structure the deals in Astana International Financial Center. For example, for a lawyer, we have paid about last time $3,000. It's less. It's cheaper than in other English law zones. It's not good for government indicators and statistics. When the local company go to register to English law zone, but to whole fintech ecosystem, I think it's a positive factor.
Thank you, Dilshod. I think that's a really good example of how, at least if the regional governments become comfortable in allowing companies to use these kind of third-party legal environments, like a free trade zone or an international financial center, then it might make it easier for companies to target the whole region, almost as though they were a company coming from outside of the region into Central Asia. So I want to end our excellent conversation today by talking about please, Dilshod, go ahead.
Yes, excuse me. I have another urgent Zoom call, so I have to leave.
Yeah,
Thank you very much to all. Thank you. It was a very pleasure.
Thank you, Dilshod. Thanks for the
Bye.
presentation.
Thank you.
So to wrap up, I thought we would talk about people as the sort of final and perhaps most important element of this, and then I'll turn it over to Louis to make some final comments and reflections. But one of the things that has come up is this question of where is the talent base, and is that talent going to develop so that, as Hus mentioned, you have the right kind of developer skills in the country to build this infrastructure to work for the local fintechs and their service providers. And I'm sure that, Simon, this was also a big thing at the beginning of the fintech kind of Cambrian explosion, as you put it, that you had to have the people who were able to build these products. And it would be interesting to reflect on that. And I think people is also important from the other side. One of our audience members pointed out that what's unique about Central Asia, perhaps compared to some of the earlier markets where fintech first developed, is that it is an overwhelmingly young region. So, most of your consumers are going to be under 30 years of age, and that means something very different, both in terms of the talent development. Young dogs can learn new tricks, we might say, to adapt that phrase. And then at the same time, you have this consumer base. So maybe what we can do is start with Hus, if you want to comment on the talent component. Simon, we can get your thoughts, Kiyan, and then I'll turn it over to Louis to wrap it up.
So, I mean, it's across the region, very well educated population. But when it comes to technology, they haven't had exposure that I think they need to cloud-based technologies, so things that Simon's already mentioned. Containerization, Kubernetes, service meshes, basically all of these come from public cloud deployments, right? That's where, because it's a shared infrastructure that has to be isolated at the software level. Whereas the mentality that I see is we'll buy our own hardware, we'll segregate it, secure it in our own data center, costs a huge amount of money, isn't done well, and it essentially becomes a burden. So I think any real effort to modernize and kind of potentially leapfrog in the region when it comes to technology has to be accompanied by some kind of e-learning strategy, some kind of skills transfer strategy, and incentives to put those in place. What I've seen previously is expats coming in and not transferring skills. I saw that in Myanmar. And it was something that I think at Wave Money, we decided, so no more expats. We're going to force the issue. We're going to hire people locally as much as we can and try and train them up, because we just want to drop this dependency. Now, you're going to need foreign assistance, no doubt about it. And you have to invite the big players and incentivize them. I think you need Google, you need Microsoft, and you need Amazon to set up availability zones in the region, followed with education program, which is already available. I don't know, can't speak for Simon, but I taught myself a lot of the skills that I needed through the internet. This isn't something that academia necessarily needs to support, but it'd be great if they did. So I think the potential's there, but you have to be a bit ambitious in terms of choosing the right technologies now to ensure the future is secured properly.
Thanks, Hus. Simon.
Yeah, I would echo exactly what he said. One of the most important things the CTO does at the beginning of a project is choose what programming language and what technology stack you're going to use. And the decision is very rarely just about what is the best technology. The decision is usually about what is the availability of skills that are around. You know, at Monzo, we picked Golang, which was a very young language at the time, very new. It had never been taught in schools, which meant that everybody who had learned Golang had done so because they aspired to work at Google, which meant that the people that we ended up hiring were very competent and very professional. And we got very lucky that a very large company, a taxi app actually called Halo in London, had just shut down and basically failed, and meant that there was a large number of extremely experienced developers who knew that language. But it was, 50% luck and 50% planned. But it's very much the same with Fronted, where we picked a slightly different language. We picked Python. But I would say that because of the pandemic and because of the world that we live in now, there's this weird thing that all of a sudden it doesn't matter so much where people are based and are living, because everyone's working from home. The entire world has basically been forced to go remote first over the past 9 months. And I think the knock-on effects of that for a CTO, for choosing a language and for choosing a technology team, haven't yet been fully appreciated. Like, I can now go out to anywhere in the world and hire Python or Golang people to build our product. So I think, those are the main things. Obviously, like local languages, like the language that's spoken is very important to get a code base, and you need that. You need to hire people who speak the language of the consumers and who will share a common language when you're building a new startup. So there's two languages basically: the language that's spoken on Zoom and the language that the code is written. I think are the key considerations.
Thanks, Simon. Kiyan, how are you navigating the talent question with the companies that you're investing in?
Yeah, sure. I mean, it's actually one of the biggest resource constraints that I think we and our portfolio companies have. Because typically what's happened is, what's great about Uzbekistan and kind of the other ex-Soviet Union countries is that historically they've been educated in the hard sciences, which one could argue are kind of the best form of education to have, but that the talented people typically have left the country to work in the US or kind of in Europe. And you're having somewhat of a reverse brain drain, but still the pool of talent available that has not only been well educated, but has had that education unlocked through professional expertise in good companies is limited. But having said that, what we do is two things. So thankfully, the companies that we invest in have local individuals that are leading those companies that are not only well educated, but talented within the domain expertise that they need. But we try and support that by hiring non-Uzbeks on a remote basis, as Simon mentioned, now that it's possible to supplement that team. And the second thing that we do is try to build a pipeline from the universities. So we're actively partnering with the universities in Uzbekistan to give scholarships to what they consider to be talented students. At the same time, whilst they're studying, they get to do internships within the portfolio companies we've invested in. And the idea then is once they finish their studies, not only do they have the education, but they have the professional expertise to understand where they can outlay that education, and then hopefully join the portfolio companies that we've invested in. To try to create their own funnel or pipeline of talent, which I think is the only way to do it in the country, frankly.
That's fantastic. What an excellent initiative. So we've, I think, had a really substantial discussion about basically how fintech, the challenges it's facing, and how it might develop in the region. Louis, I will turn it over to you to give sort of your reflections and final comments, and then we'll bring the meeting to a close.
Thank you, Yar. Well, I would like to thank you and the panelists for what's been a fascinating discussion. I mean, as a lawyer of a in his late 40s, it's sometimes hard to follow. And I think that's an important point in the sense that you're dealing with countries where most things are driven from the top by people who may well even be older than me. I think the sort of key lesson here is that this is technology driven. This is something that's driven by people who are looking to provide services at the lowest cost and in the most efficient way. That's what young people have come to expect. It's a consumer revolution, a young generation revolution. And for me, having spent a lot of time over the past 5 years working in the region, I think that there is the thirst there amongst young people to have those types of services. The key is going to be whether or not the government officials and bureaucrats who obviously legislate for frameworks, provide policies, are going to be quick enough and have the will to provide a framework for this to develop. So yeah, I mean, I think it would be very interesting. There is, as Kiyan and others have identified, this tremendous potential to leapfrog, but at the same time, it's going to require understanding amongst regulators and decision makers that they have to allow the private sector and these young companies and young people to build this infrastructure without their supervision or interest. Thank you.
Thanks, Louis. I think that's the perfect ending note. It's obviously, we're talking about a region that is very top down and how it's run, but we're fortunate to have people like Hus and Kiyan and Dilshod knocking on the doors and trying to push for that bottom up kind of agenda setting around fintech development. So with that, I will bring the webinar to a close. We will be sharing the presentations and the recording in the next couple of days. I want to thank everyone for joining and the stellar panel for their contributions. You know, it would be very interesting to do this webinar again in a year's time and see how much progress we've made. It's very clear that things are moving quickly. So thank you all for the time. Have a good day wherever you are, and we'll be in touch with more information soon. Bye-bye.